Oh, ho, ho, ho! How are you? Today is Friday, December 23rd, 2022, and I am Kenny Polcari, your host of the party. You see, I'm getting ready for the weekend. I got my Christmas vest on, and so here you go. In any event, what's going on, right? What's happening? Yesterday was a very interesting day. And remember what I told you about this week and next week about how moves can be exaggerated in either direction. And I think that's really what we saw the last couple of days, actually both up and down on Wednesday and Thursday. So it was the strong economic data yesterday that caused the algos to go into sell mode. And then we got bearish comments from famed hedge fund manager Davey Tepper, only adding to the angst. And then the winter storm is sweeping across the nation and sending oil higher. And what are we having for dessert? It's another dessert for the holidays. It's a creamy cheesecake. It is so good. It was my grandmother's. Okay, so look, I'm just taking a couple of days off next week, so there may not be a letter until, say, next Thursday or Friday. I'm not sure yet. It depends. So enjoy the long weekend with friends and family as we all celebrate a holiday. So take good care until then. But let's talk about what happened yesterday, right? Stocks fell under the weight of better economic data, right? Which is really funny since the data reported yesterday was mixed at best. But in order to support the Fed's narrative, higher rates for longer, the conversation focused on the stronger data, right? Third quarter GDP was revised up to 3.2%, up from 2.9. That's actually a positive. I mean, a good positive. Personal consumption was also stronger, up 2.3% versus the expected 1.7%. And initial jobless claims rose less than the estimate, underscoring the ongoing strength in the labor market. And don't forget, then that was that Micron technology issue, right? The weaker forecast, the semiconductor chip glut, job cuts, less capital spending, and cloudy skies at least until the second half of 2023. And that took MU down 3.4% to end the day at 49.44. And it took the whole semiconductor space down. The SOXX, the SOX ETF, down 4%. Fan favorite NVIDIA down 7%. AMD down 5.6%, Intel down 3%, and Qualcomm down 3.5%. And add insult to injury, famed hedge fund manager Davey Tepper told us that he's leaning short on U.S. equities in the new year, saying that the global tightening will add to the risk-off sentiment. Hello, we've been talking about that for months. On the other side, we had a weaker Kansas City Fed survey and a weaker leading economic indicator from the Conference Board. But no one wanted to focus on those weaker numbers because it was all about the negatives yesterday. And so stocks collapsed as the algos kept sending wave after wave of sell orders through the system, causing the buyers to step back and let prices fall. I mean, why would you pay $40 a share when you can buy the same stock at $38 5 minutes from now? And in fact, because the price is cheaper, you can actually buy more stock, which also means that the sellers have to sell more stock as prices decline in order to raise the amount of money that they need to raise. So you see, it's all very orchestrated. In the end, the fact that some of the recent data remains strong only complicates what the Fed might do next. I don't think it does, but that was the narrative from yesterday. Okay, so you see a strong economy is going to keep inflation high, and that's going to force the Fed to continue to raise rates. And now we're hearing more analysts suggest that a March pause may not be guaranteed. Something else I've been saying for months. Priya Misra, head of global rates at TD Ameritrade, said it very clearly yesterday on Bloomberg television. She said U.S. inflation is going to be sticky on the way down because the labor market has remained so resilient, and that's going to keep the Fed firmly on the path of rate hikes. So we may actually see that the Fed is going to be hiking all the way until May, taking rates to 5.5%, and then very reluctant to ease policy, right? So that was her commentary. So the Dow ended up closing lower by 350 points or 1% after being down as much as 800. The S&P lost 56 points, 1.5%. The NASDAQ closed down 233 points or 2.3%. The Russell lost 22 points, and the transports gave up 143 points or 1%. It's also the end of the year, and remember what I said last week, that moves can and will be exaggerated in either direction. And as many portfolios and investors and traders are just away for the holiday. And yesterday was just another example of that. Once again, tech, XLK, and consumer discretionary, XLY, took it the hardest, falling 2.5% each, leaving both of those sectors down 28% and 37% respectively on the year. Tech is now suffering its worst performance since the dot-com crash of 1999-2000. That was last century, right? How weird does that sound? Energy, XLE also got whacked, falling 2.6% as investors took money out of this very strong sector on the year, leaving it still up 52% year to date. Disruptive tech, the ARC, fell 3.4%, leaving that group down 66% year to date. All while Kathy Woods keeps telling us, don't worry, at some point when the Fed stops hiking, her portfolio is going to surge higher. Well, yeah, thanks, Kathy. Thanks for that eye-opening analysis. The whole market's going to surge higher once the Fed stops hiking. That's a whole other conversation. And then while all of the 11 S&P sectors closed lower on the day, the contra trades did well, as you would expect. The dog, which gets you short the Dow, was up 0.7. The SH, which gets you short the S&P, was up 1.2, and the PSQ, short the NASDAQ, was up 2.1%. The fear trade, the VIXY, VIXY, rose 5.3% as the VIX surged by 9.5%, taking right to trendline resistance at 24.05 before backing off. Treasury yields rose, oil held steady, and this morning it's up another $1.60 at $79 a barrel as severe winter weather blows across the nation, sending temperatures plunging while heating oil demand surges. Gold has had trouble holding on to the trend line at 1812, and it's trying to recover after yesterday's beating saw it take $25 out of it, right? Investors took $25 out of it just to $1,800. This morning it's up $10 to 1805. European markets are all high this morning, just as the weekends. Nothing really new. They're getting ready for the holidays. This morning, U.S. futures are churning higher. The Dow up better than 125. The S&P up 16. The NASDAQ up 50. The Russell adding 9 points. Eco data today includes the Fed's favorite inflation gauge, the PCE, and that's expected to be slightly lower, and that's a positive, right? And if it comes in even better, which means even lower than expected, and the expectation is up 1/10 month over month and 4.6 year over year, then expect the algos to go into buy mode and buy these stocks right back up. Remember, exaggerated moves all week, so don't go making any investment decisions based on this week. The S&P closed yesterday at 3822, down 56 points, leaving us range bound as we move into the year end. I still expect Santa to take the S&P up to the 4,000-ish range by year end, and then the fun will start again in the new year. Remember, it's all very basic. Have a plan and stick to it. Stick to your goals. Take advantage of dollar cost averaging in your long-term tax advantage retirement accounts, IRAs, Roth IRAs, 401ks, wherever it is that you can do it, do it. Okay, so we're having this creamy cheesecake for dessert, right? It's another of my favorites. It's an easy to make dessert for the holidays or any time of year. The recipe, once again, reminds me of my grandmother. This was one of her recipes, and it brings a smile to my face, and it will soon become a staple on your dessert table, along with the other Italian pastries like cannolis, profiteroles, sfogliatelli, paragini, and pasticciotto. Okay, but anyway, get started. Preheat your oven to 375 degrees. Now get a pie dish. For the crust, you need 1 1/4 cup of flour, 1 1/4 teaspoons of baking powder, 1/4 cup of sugar, 1 stick of melted butter, 1 beaten egg, and 1 teaspoon of vanilla. Put all those ingredients in the pie dish, in the pie plate, right? And take a fork and mix it. Once it's formed, using the back of like a tablespoon, gently spread it throughout the whole plate, right up the sides, around the bottom. Squish it out. Don't leave any holes. It'll fill the pie plate. Now for the filling, you need 16 ounces of Philadelphia cream cheese. That's 2 packages, 2 beaten eggs, 1 cup of sugar, 1 tablespoon flour, 1 1/4 cup of whole milk, and a teaspoon of vanilla. Combine all those ingredients in a blender. Mix it really well. Now just take this mixture and pour it directly into the crust that you just created. Sprinkle cinnamon on top and then put it in the middle rack in the oven. Bake it for 35 minutes. Remove it. It's going to appear shaky. No need to worry. As it cools, it becomes more solid and creamy. Stick it in the refrigerator, and when you're ready, you can eat it just plain, or you can put on any fruit topping you like. I just like it plain. It is so rich and creamy. It is so delicious. You are going to love this cheesecake once you make it. In any event, look, it's Friday before the holiday weekend, Christmas Eve tomorrow night, Christmas Day on Sunday, and then Monday we have off. in celebration of the holidays. It's the end of Hanukkah. It'll be the beginning of Kwanzaa. So whatever you celebrate it with family and friends. And thank you for allowing me to be part of your life every day. Until then, take good care.